We have Midula, Nandini, and Suchita and Abhinami, isn't it?
Yes, sir.
Okay, start.
Yeah.
Yeah, can you guys hear me?
Yes.
Yeah, we can hear you. Yeah. Who's speaking first?
Mridula.
Mridula, sir.
Midula.
Yeah. Good morning, everyone. Today, our group consisting of Abhirami, I'm Mridula, Nandini, and Suchita will be presenting the IPO analysis for Angel One.
So whoever is presenting, they should put their video on for a while, and then they can, switch it off for
Okay,
1 minute or so to start with. Okay.
Yeah.
So that I can, recognize you. Yeah. Midula.
Yes, sir.
Yeah, you can start.
Yeah. So, Angel One Limited, formerly known as Angel Broking Limited, is one of India's oldest brokerage firms. It was established in 1996. Its services include booking and advisory, investor education, research services, margin funding, loans against shares, and distribution of various financial products to its clients. They recognize the evolving expectations of the set of investors, which goes beyond just mutual fund investments and stock trading, and into the realm of rule-based investing trading, which led to the formation of Angel Fund. Next slide, Nandini. So now we'll be taking a look at some of the strengths and weaknesses. First, let's look at the strengths of the company. So, owing to its establishment and experience, it has a large and diverse client base. It was even named as the largest listed retail broking house in India by the NSE in 2021. It has won many awards such as the NetApp Innovation Awards, BFSI Best Workplace Award, and the TEFLA Awards, to name a few. Lastly, they are a technology-led financial service. One of the reasons they continue to be so popular despite the passing of generations is because they have penetrated deeper into the broking industry with a range of digital products that remain unmatched in the industry.
Yeah. Yeah, I'm not able to hear you. Yeah, Abhinami. Sorry. Uh, Midula. Yeah, just speak again. Okay, your voice has become a little bit muted, so I'm just going to check. Just hold on. Yeah, again speak. Yeah. Okay. Yeah, absolutely. So what is this, Abhinami? What is this called? I mean, this technically what we call it in. I mean, this thing. They are offering their shares. So this is what. This is OFS. Okay, this is called OFS. That's I just wanted to check. Okay, 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 okay. So will they be, within the norms of ICDR rules, minimum, promoter contribution, or they will fall below it? How much the promoters should have basically in a company? What percentage of shares the company promoters should be having the shares? Do you have any idea? Okay, no, it's 20%. Promoters contribution has to be 20%. So just keep it. I mean, this it's important for your exams also. Okay, so fine. So promoters have to have 20 crore rupees, sorry, 20% of, contribution after the post issue. So they should be, 20% shareholders of the company, basically. That's a minimum promoters contribution. Okay. Okay, go ahead. Abhirami, just stop. Somebody's, I think, they have to need to mute basically. I think somebody's microphone is just. So please mute yourself. I'm hearing some other noise also along with what Abhinami is saying. Okay, Abhinami, please continue. But how could, the Abhinami, the profit has dipped from, almost from 1,000 crores to 381 crores, whereas the total assets have gone up tremendously. And revenue has come down. I mean, any specific reason? I mean, why the revenue has fallen so much from almost like 7,427 to 2,440 million? Okay, maybe because of the pandemic. Yeah, yeah, you're right. It's sure, sure. Yeah, yeah. Okay, fine. That's I think a valid explanation that because it was during pandemic, the revenues have fallen. Okay, though the assets have gone up, but that has not resulted into increasing of turnover of the company because they were not operating at maybe at a very low capacity. Okay, fine. Go ahead. So, but this is again, this is a, yeah, Abhinami, this is a quarterly profit, okay, not when you're comparing profit quarterly with a yearly, so definitely it has gone down, okay. 31st of March 2020 seems to be for the whole year, isn't it? And 30th June is basically April, May, June, 3 months profit. Yeah, yeah, okay. But whenever you are putting the numbers, you should put quarter to quarter, or you should say that these are quarterly numbers. Okay, fine. To just have a comparison, what was the Q4 quarter performance versus the Q1, basically, So because here you have to say that this was the first 3 years are full year performance, and June is the just a quarter performance. Okay, go ahead. Yeah, yeah, Suchita. Okay, just hold on, Sujita, hold on. They have actually followed a book built mechanism, okay, by getting bids basically. So what this was this company meeting the norms, or they were the companies who were not in, they were companies, so the company was in profits, okay, fine, isn't it? So they had gone for, they could have even gone for, what was the, size of, I mean, what was the allocation? Who got shares? I mean, it was QIB or it was retail. Have the breakup here somewhere? Aha, that is okay. Just hold on, just a minute. Okay, QIB was 20%, retail was 35%. So now, just to check here, retail were offered 35%. Is it in line with the norms set up by the ICDR? I mean, have you any idea? If it have been, yeah, because if the company would have been a loss making, then it would have been 75% would have gone to the QIB. Okay, just hold on. I've got just a call somewhere. Okay, just a sec. Okay, I'm just joining. Just yeah. Sorry, I mean, why I'm asking this question is not that, it's because it is important from your exam point of view. Just open up the public issue PPT which I have shared with you. Just open. Have you got that presentation? Oh. Just go to maybe around 170 slides. Number. Slide number 170 something. After the price band, yeah. Yeah, after this, yeah. Okay, after this. Yeah, but just open this. Open this and just read out all the slides. Suchita? Okay, just hold on. Now this, okay, now this is actually under regulation number 6, sub-regulation number 1, because the company is profitable. Okay, fine. If the company is profitable, it is sub 6(1). If the company is not profitable, then it will be 6(2). Okay, not less than 35% to the retail individual investors. Okay, So now your company, Angel One, has offered, 35%. So they have met the criteria. They have offered, they should not be offering less than 35% to the retail investors. And what they have done it. Okay. So in my exam question in the case study, I have exactly, asked you to, validate whether, what, or rather, you should mention how much they should give to RRI, how much to the NII. Okay. So how much to the NII? 15%. Fine. And how much to QIB is not more than 50%. Okay, fine. Okay, now you just go back to your slide. You'll find exactly they have offered like this only because the companies make in profits as we have seen. So they are mostly meeting all the criteria, and just make it a little larger. Yeah, present it. Yeah. Now they are offering RII 35%, NII 15%, isn't it? And anchor investor 30 and QIB 20. Okay. So not more than 50% to the QIB plus the anchor. Okay, fine. So that is what they have actually done basically. So they have met the ICDR rules, isn't it? So this is very important for you, all of you, to learn that whenever the company is profitable, they can either make a fixed price issue or a QIB. If they are making a QIB, then they should offer at least 35% to the retail investors, 15% to the NI, and rest to the other investors, including QIB and the anchor. And what they have done is exactly as per the law. Okay, is that okay? Abhirami, have you got it? Okay, Nandini, have you got it? What I am saying, or is there any question? Okay, so in your exam question, exactly there will be a question. Okay, where fortunately it will be like this only, that the company will be offering has to offer not less than 35% to the retail investors and not less than 15%, and not more than 50% to the anchor and the QIB. Okay, fine. Go ahead, please. Go ahead. From wherever you want. Yeah. And what is the Suchita? What is the IPO date was 22nd to 24th, isn't it? So how many days the IPO was open? Just count it. Minimum has to be 3. Okay, and what is the maximum days? What is the maximum? What is the maximum number of days the IPO can be open for? 10 days. So it is minimum 3 days and maximum 10 days, which is given by the rules, IPO rules. Okay, fine. So, and the, okay, fine. So issue size, let me just go through offer for sale, issue type, NSE. Okay, fine. Go ahead. Please go. So don't worry, even if you don't know, I'm just making you understand so that you can know about what is the rules regarding IPO. So nothing to take away from your presentation. Don't worry about it. Okay, go ahead. Okay, go ahead. Yeah. Now tell me one thing. Tell me one thing that retail investors do they qualify for some discount compared to others? Can they get a discount price compared to the what others are getting? Do you remember? No. Okay, they can be given 10% discount, compared to others. Like employees of any company and the retail individual investors can are eligible for 10% discount. So they are always given 10% discount over the price at which the others are given. Okay, fine. And what is the maximum amount a retail investor can, bid for? or an employee can bid for? Do you remember? 2 lakh rupees. Okay. For retail investors can maximum apply for 2 lakh rupees. Okay. So whenever you are making an IPO application next time, you will find that you can't make an application more than 2 lakh rupees per person for an of this thing. Okay. And for an employee, it is 5 lakhs. Okay. Fine. Okay. Go ahead. What is NII? Okay, fine, very good. Now, if I have to say, sir, define what is NII, can you? Who will be coming in NII? RII, people like you and me, RRI, QIB, those all 13 entities which are registered with SEBI as, the big investors. So what is NII? All investors which are other than QIB and retail investors are called NII. That's the simplest definition. Okay, fine. Chalo, go ahead, please. Okay. Please present this. Yeah. Which year they had come for this thing, the IPO? 20. So you said that you are not able to get the growth for Angel One, but no, you can easily find it because now we are 2022. So as on 2020, if you go to the screener, you will find, just open the screener. I'll just tell you Angel One. Just open. Okay. Go to just screener. Go to screener, not the market screener. Okay, just screener. Yeah. Put the name of the company of your company. Go to profit loss account. Go to profit loss account. Yeah. Yeah. Just see the EPS. Okay. In 2021, it was 297 from 82. Sorry, EPS. Okay. EPS was 32. Acha, it is not. EPS is not mentioned, isn't it? Because it was not listed. Now it has been listed. It has gone up from 36 to 75, from 75 to 92. So these are the three numbers which are given to you. Okay. Fine. So that means the last 12 months. Okay. Fine. So that means it is going from 36 to 75. So almost like 50%, from 75 to 92. So which is about 20%. So roughly around 30 to 40% growth we are seeing. Right. So that is what the growth is basically. But now since you are doing in a hindsight now, because all the information is available to you, so if the PEG ratio is 25.67, if the growth, assuming it is based on the actual numbers which the company has experienced, is close to about 30%. Okay, so the PEG ratio will be below 1, isn't it? That is a good. Yeah. Ah, yeah. Okay, fine. Okay. Fine. Nandini, what I'm just telling you is that if you calculate the PEG ratio, it will be coming. Go back to the next earlier slide. This is Angel One. Okay, this is for what? This is again for Angel One, isn't it? So next slide, what you talk about is for which company? Oh, okay. 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 So EPS is 92 and PE ratio comes to 16.1 and the PEG ratio is 0.2. Okay, fine. So that means it is quite underpriced compared to, if you look at the PEG ratio, so it is quite cheap. So there would be some other reason why people are not buying it. Okay, fine, because it is having a low PEG ratio of 0.2. Despite having a low PEG ratio, the price is not jumping. Go to the screen and see that what is the share price trajectory over the last 6 months. Go to the chart. Go to the chart here. Okay, now this chart is suggesting that it is more or less it's rising, of course, because all the stocks have risen. Press the 50 DMA and 200 DMA. जो नीचे दिया हुआ है 50 DMA and 200. Press both. So the 50 DMA is basically above the 200 DMA, which means the trend is bullish. Okay, fine. Which shows the stock is going up, and it is going up basically, but not as faster. 1 year. Put a six months. This thing. Go to 6 months. Okay, so it is going up. So it is going up basically, and go to the the P ratio. I mean, इसमें P ratio दिया हुआ है. So P ratio of the company is falling. Okay, fine. So the stock is getting re-rated. So if you look at the P ratio, just put your pointer towards any of the graph. Yeah, where the line is there. Yeah, P ratio is about close to about. What is the current P ratio? Just go to the last leg of it. It's about 16.7. Okay. Whereas, in the month of May 22, go to the May 22, the P ratio was close to about, no, I mean, go to, yeah, the P ratio was, yeah, May something, I mean, anywhere. Okay. Yeah, it was 26, 25. Okay, so the stock is, the P ratio is coming down, okay, which is not a very good sign because the stock is getting re-rated at a lower level. Okay, fine, ठीक है, चलो. That's why I just wanted to check. Yeah, maybe because of some reason which is not given here. So we have to look at the analyst basically view of the stock going forward. Okay, fine. So it's okay. Go back to your presentation. So what you have done is well. Whatever you have done is well. I mean, it is I mean, you have tried to explain that the PEG ratio is low. The stock is undervalued, but because it is trading at lower to its growth. Okay, fine. So stock can be recommended to buy. Is it? Yeah, it's okay. Fine. Go ahead, please. Yeah. Acha, that was your presentation. So, just Suchita also presented. Yeah. Fine. Okay. So what there's two ways I can give you marks. One can be based on, I have just, listened to everyone. I have given some marks based out of 10. I can make an average of it or I can give you individually. So what do you will prefer? Abhidami, what will be your preference? Anything. And Nandini, what are you? No, but I'm not going to share the marks. I'm just asking what do you want? I mean, should be individual or should be group. Normally, what people say is that it should be given as group rather than individual. Okay. Yeah, so people, so you have worked as a team. Okay, so maybe you might have done some work in, I mean, researching the numbers. Okay, and because Nandini, your part of the presentation was where you were trying the valuation of the company. Okay, which was more of a the best part of the presentation basically, and so definitely I'll be biased to give more marks based on that, but I'll not do that. I'll give an average to all of you. Okay, fine, fine. Is that okay? ठीक है, तो एवरेज मार्क हो जाएंगे. तो एवरेज मार्क अभी दिखाता हूँ, आपको बताता हूँ किस रेंज में आ रहे हैं. The four group of four. See, actually, you don't have to negotiate for the marks. Okay, I'm giving you something which is I'll be just rounding off to the nearest highest number. Okay, So you were getting 7.62 out of 10, but I will, make it 8 out of 10. Fine. And to be, Nandita, you are getting 9. Okay, fine. But after rounding up, you're getting 8. Fine. And Abhirami, you were also, I mean, Suchita was also getting good, and Abhirami was also getting. Midula, you were just, your voice was not coming so clearly. So maybe, I mean, your rounding off will take care of that. Okay, fine. The group will be taking care of that. Okay. So you get 8 out of 10. So I'll make it out of 25 or 30, whatever is the assessment procedure. Okay, fine. Okay, fine. Thank you. Thanks a lot. So next group, please. Rohanshu. Yeah. Rohanshu, you are there, isn't it? Okay, just hold on. So who are there? All the group? Yeah, it is visible. Rohanshu and Saurabh Seni. The two people? Okay. Yeah, go ahead. Who is speaking? Okay, Saurabh, you are speaking. Yeah, Saurabh. Yeah. Continue, please. Acha, tell me, this is the beta of what this Just Dial company is 0.65. Okay, okay. It looks to be quite low, but anyway, fine. Riskless rate is 7.74%. Okay, market risk premium is 8%. Debt to equity ratio is 0. No debt of the company, you're saying, isn't it? Discount rate is 10%. What is this discount rate? How it has been calculated? I mean, after on the CAPM method, okay. So it is 7.74 plus, beta into the market risk premium, that is 8 minus 74 into 0.65, and then you have calculated this discount rate based on that. Okay, just hold on. हाँ चलो आगे चलो, कोई बात नहीं, चलो. Okay, just hold on, Rohanshu now. Sorry, not Rohanshu. It is Saurabh Seni. Okay. So I have some couple of questions. Okay. Now tell me, riskless rate, 7.74%. From where you get this rate? No, but this rate is of which bond? Which bond? Is it a 3-year bond, 5-year bond, 10-year bond, 20-year bond, 30-year bond? Issued by which, whom? This is basically the, 7.74% is a coupon rate or, yield to maturity. है क्या ये? Do you know what is the current 10-year yield of a government bond, which should be the riskless rate? Okay. It's close to about 7.26 or 7.28 currently. Okay. So when was this when was this IPO came? I mean, which year? 2013. Okay. So we have to actually look at the risk-free rate around that time, if we have to find out, the company valuation. Okay. Okay. Then, okay, maybe, tax rate of 34% in 2000 would have been justified. Now it is coming around 25% for most of the companies. Okay. Fine. So tell me, what is beta? What is good, bad, and normal beta? I mean, how do you qualify a beta as good, normal, and very bad? So what will be a normal beta according to you? So if suppose beta is not available, if the beta is not available, okay. If suppose the beta is not available, then how do you, get the beta of a company which is not listed on the stock exchange? So what is the process of, determining the beta? Any knowledge about that? If you don't are not able to, there is not, how do we get a beta of a company based on what? But now tell me how the beta is calculated otherwise. I mean, normally for any company, how we are going to calculate a beta? Just I'm posing a simple question. If you have to calculate a beta of a company, which is, listed on the stock exchange, so how you will be able to determine the beta of a company? No, no, okay, don't tell me the formula. Tell me what is beta. What do you understand by beta? Just tell me that. Okay. Stocks volatility. Can you complete the sentence? This is just half complete. Stock volatility, I mean, with in comparison with what? If I just, give you some cue. So if I just give you a cue, stock volatility in comparison with what? in comparison. हाँ, no, yeah, actually क्या है? It is basically the beta is how volatile is the stock compared to the market itself. Okay, and market beta is always one. Okay, so it can be more volatile than the market, it can be less volatile than the market. So if it is more volatile than the market, then the beta will be more than one. If it is less volatile than the market, then it is, less than one. So it is less riskier, we can say, if it is less than one. If it is more than one, we say it is riskier than the market. Okay, and normally we assume either Sensex, Nifty, or any broad-based index as the market. Okay, fine. चलो ठीक है, go ahead. Next slide, please. हाँ देखो रोहांशु, आपकी स्लाइड पहली स्लाइड में बोल रही है बीटा इज अ मेजर ऑफ स्टॉक वोलेटिलिटी इन रिलेशन टू द ओवरऑल मार्केट. Okay, so this next slide of your is actually explaining what the beta is. Okay, fine. Go ahead, please. Okay. Rohanshu, can you take me the slide where you have calculated the valuation based on the DCF model or the CAPM model? Can you just take me the slide, because it's okay. This is all fine. Free cash flows, revenue growth. I mean, these are the okay. So this is oh, okay, fine. ठीक है, आगे चलो. Go ahead, please. Go ahead. I mean, with these free cash flows are in what? I mean, rupees or crores or what? Free cash flow 663 crores. Okay. So you're saying the value per share is coming 1344, 2000. When you're saying revenue growth, free cash flow, and 814. Okay. Our valuation just here is 1814. There is a difference in IPO valuation and retail valuation. So what was the value per share offered in the IPO? So that means your valuation, even the least valuation, is coming much better than the value offered by the company, isn't it? Okay, but it's not very convincing because it is basically only the three numbers which are given: the beta, the revenue growth, and free cash flow. Okay, fine. Okay, go ahead, please. Next slide. Okay, so that's all for your presentation. Now tell me why you haven't chosen the P ratio or PEG ratio to compare the company with its peer group. What was the composite? Why haven't you chosen that? Why you chosen the DCF method, where the DCF method itself is not properly been explained in your PPTs? Okay. Okay. Have you checked that their prospectus and seen the, I mean, the valuation, that sheet where they tell, the basis for valuations? Have you gone through that sheet? So they were saying there is no industry peer and, company doesn't have, but you can still calculate the P ratio of the company based on, EPS and based on the basically the opening, the upper cap and lower cap. I mean, okay. So what is the P ratio of the company calculated on their own basis? I mean, on the basis of upper cap and lower cap. Have you seen that? But that would have given, if you would have present even that slide and said that there is no industry comparison, okay. But then, you should have looked at basically, the same company internationally which is traded, okay, with the same kind of a business, what the P multiples it is traded in, say a country like US or in country like, any other country in the world. Fine. Suppose the P ratio was say 50 for this company. Now, instead of having the industry peer within India, because there's no other company, parallel company in India, then you would have compared it with any other company in the world. Okay, fine. To see whether, the valuation is justified or not. Isn't it? So, ठीक है आप ऐसा करो रोहांशु and Saurabh, just based on the upper cap and lower cap, the P multiple which you saw on the company's red herring prospectus, put that number on the slide, and then go to a site which is P ratio by Damodaran. Okay, it gives you all the P ratios, all the companies in the world industry wise. Okay, check and find a company which is parallel to this company, or just find in Google, is there any company in the world which is doing the same kind of a business? Okay, and go to market scenario and check what is the P ratio of that company. Okay, fine. So if till the time I'm just putting a hold on your marks at the moment. Okay, fine. So you do it this process whenever you are free next couple of days. Okay, and just share with me. That's all. I have put your marks, but I'll just finalize after I see your that slide. Okay, send me a WhatsApp. Okay, on my name itself. Okay, so do that process. Right? Okay. Okay. So who is the other one? Which is the group which is going to present now? So there is a break now. So we will meet at 12. Okay. So it's a break time. So who are there now? Which group? So there is a break for 15 minutes. Are you able to hear me? Who is going to present next after the break? What's your name? What was the time slot earlier? Acha, okay. Just what was the time slot earlier? Okay, 12 o'clock. Okay, this is Aryan's group, isn't it? Okay, okay. Just note down. Aryan, Vishal. Acha, and what are the other names? Shivendra. Okay, Shivendra. And then Siddharth Shah, Yash Lankade, Suvin Jacob. Okay. So when you will be presenting after 5 minutes? Okay, no problem. So I'll be back in 5 minutes. Okay. Okay, 5 minutes. At 12:05, you can start presenting. Okay. So are you ready, guys? Aryan, Shivendra, Siddharth, Yash. Okay, okay. Just show me the first screen where your names are given. The first slide. Okay, yeah. So you're Aryan, Subin, Vishal, Yash, Siddharth, and Shivendra. Okay, start your presentation. So who is presenting first? Shivendra is presenting. Okay, first. Okay, just hold on. Siddharth, sorry, who is presenting? Shivendra. They choose book built. This is a issue type was book built. Okay, fine. So why they choose book built? Any reason for that? Why they are not gone for a fixed price issue? Shivendra, are you hearing me? Hearing me? No. What was the main reason why the company was forced to go for a book built and not a fixed price? So that was the after effect of the this thing IPO. But they chose. I mean, to start with, they choose a book built. So, Vishal, sorry, Srivendra, actually the company was not making profits. It was not able to meet the criteria for, so they had to go for book build because the companies who are not, meeting the norms of profitability norms like net tangible assets or the other norms, profitability norms, they have to choose book build, isn't it? And yeah, no, lower price, upper price to have because they have to advise give a lower band and upper band. But now this company was a loss-making company. It had not shown any profit, so there was no operating profit of 15 crores for each of the three or average operating profit of the last 3 years. So that's why and they were not other meeting the other criteria also. Maybe I don't know. We don't know. So how much they had to offer compulsorily to the QIB? QIB का कितना compulsory portion होता है इसमें? Just show me that slide where how much offered was offered to the QIB. जहां पर वो QIB को ऑफर करा हुआ कितना वो आपकी स्लाइड में है ना एक जगह पे कहीं ना कहीं है कि नहीं है द QIB हैज टू बी ऑफर्ड एटलीस्ट 75%, isn't it? अगर देखो आप हाँ ये देखो QIB क्या क्या है आपका QIB was no, this is times basically. This is not telling you how much any other slide apart from this. This talks about what was the category this thing retail category they public with 47. Okay, it is not there. So, Shivendra, actually, all of you must know that the company is, not profitable and company is not meeting the eligibility criteria as per regulation 6.1. Then they have to offer their IPO under the regulation number 2, where they have to offer of the main regulation 6. They have to offer. They have to at least give 75% to the. This is open up my public issue slide. You have the access to the slide which I had presented in the class, the public issue. Just open that. Uh, do you have the company's profitability details somewhere in your presentation? Just show that first. Just show that first. What was there? I mean, just show. Go back. Yeah, just go. Yeah, here only. So the revenues in this company came up in the IPO in 2010, isn't it? Huh. Acha, look at the profitability, this thing of the company. Is the company making money? Is the company earning per share for the shareholders? The profit after tax, EBITDA, everything is negative, isn't it? So company is not profit making company. Now you open up the public issue slide. Open the public issue slide. Yeah, yeah. No worries. Just open. You can take your time. Yeah. Go to 150 slide number around, or say 150, yeah, 125 or so. Yeah. Yeah, yeah. No, no, no. Go back. 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 Okay. Just no, no. Just pause here. Just इसको आगे चलो आप. Go. I mean further, 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 further. Just here. Yeah. Okay. Go further. Go further. Go further. Go further. After. Yeah. Just open this slide. Yeah. Just make it bigger. Is it under slides show? Go to 95 slide number. 90 thereabout. यहाँ पर 98, 98. Just pause here. Just read this slide. Now, Zomato was falling exactly under the alternate eligibility clause where the company was not profitable, so it was not meeting the criteria. Okay, that of having all the criteria are given. I mean before these slides, so they have to offer at least 75% to the uh, to the to the qualified institutional buyers. Okay, now go to slide number 150 or so, 130. इसके बाद आएगा, अब आने वाला है. After the price band is over, just go ahead after the just go ahead after the promoters contribution. Yeah, go ahead, go forward. Just be there. Okay, go to the second one, next slide. Okay, this is the slide. Yeah, this is the slide. Okay, fine. Just go read this slide. Just hold on, just hold on, just hold on, just hold on. Now it is saying that if the company is not meeting, is not profitable, as in the case of Zomato, so they have to give not more than 10% to the retail in RIIs. That means retail individual investors, and 15% to to the non-institutional investors, and they have to, give not less than 75% to the QIBs, isn't it? So tell me why. Why is it so that they have to, give not less than 75% the QIBs, and why they are, they can't give more than 10% to the retail individual investors? Any logic behind this? Can you think of? Okay, here the logic is that if the company is not profitable, like Paytm, Zomato, all those companies which are not profitable, they should offer, 75% of their IPO, they should raise money from the qualified institutional buyers who are basically big players, okay? Fine. And they cannot offer more than 10% to the retail investor. The company is not making profits, okay? Fine. So they don't want, the SEBI doesn't want to risk the capital to be put by retail investors. So they want that if 75% or more of QIBs are willing to take the shares, then of course this company is worth offering an IPO, isn't it? Because if big investors they can pull around 75% or more, then this issue can go through. Otherwise, not. Okay, fine. So just go back to your slides now. Okay, now tell me. I mean, just to raise this question, how much they are supposed to give to the QIBs? What percentage? Do you remember that? And why so? Why they have to give major chunk to the qualified institutional investors? Because the company is not profitable, isn't it? And so company, the SEBI wants that maximum money should be given by the institutional investors and not by the public. Okay, not by the retail institutional investors. So go ahead, please. Yeah, go further with your presentation. Okay, one thing, Shivendra, independent director. Do you have any idea by chance who are independent directors? Independent directors are basically who are not, the founders of the company. They are, they are not the founders of the company. So they are basically, this is, as per the requirement that they have to appoint independent directors to manage the company. Okay, so this is one of the listing requirements of the an IPO. Okay, go ahead, please. Yeah. Okay, Vishal. Yeah, yeah, you're audible. Yeah, yeah, yeah. Now tell me, Aryan, what was the price? Vishal, what was the price basically of this? What price the IPO was? What was the price band? Just go back to the price band. Okay. Oh, yeah, 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 yeah. And what is the prevailing price of Zomato? Okay, I'm just checking it. Zomato. It is 64, yeah. Fine. So it is, trading below its, IPO price. Okay, fine. Chalo, theek hai. Go ahead, please. So that means, even at the price which was offered, okay, so the company was in losses, as you said. Okay, go through. But these are all numbers, Vishal, sorry, what's your name? Vishal, these are all numbers, before after the IPO has happened. The IPO was in somewhere in 2010, isn't it? Acha, 2021. Okay, okay. So it was 221. I think somewhere you have mentioned 2010. Okay, okay, fine. Acha, acha. Okay, so IPO came in 2020. Yeah, it was a recent IPO. Okay, fine. ठीक है. Go ahead, please. Go ahead. Okay, fine. ठीक है. You can skip this. Yeah, fine. I have seen that. Okay, okay. Who are the peers? Okay, okay. Yeah, yeah. I can hear you. Okay, next guy, please. Okay, Aryan, yeah. Okay. Okay, take a fine, fine. Yeah, 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 yeah. Just complete your sentence. However, okay, okay. Just Aryan, tell me now. I just want to ask one question. There are there's something called special right shareholders, SR shareholders, which you studied in your this thing. Is Zomato eligible to give higher voting rights to its promoters? I'm just asking you a question. There's a special voting rights, regulation that each shareholder who is a promoter can give, get more rights to vote. If they're holding one share, they can get two voting rights or three voting rights. Okay, subject to the overall limit set by the SEBI. Is Zomato eligible for doing that and offering, higher voting rights, superior voting rights to compared to its, normal shareholders? I'm asking you this question. Are you aware of that? Okay, so please do read that. That is in my slides right at the end, the last few slides, which contains about the special voting rights can be given to the companies like Zomato. Okay, those are based on technology-driven companies. Okay, because they do lot of data analysis. So those companies are eligible to offer higher voting rights to their promoters. Fine. So just read that clause and research on that. Okay, fine. And whether Zomato has given or not. Okay, go ahead, please. Next, please. Next. And that's very important for the exams also. There will be a question on special voting rights. Which are the companies you think can offer? Name, some companies in India who can do so. Okay. So Zomato would be qualifying for that. Okay. Maybe they would have done also. Okay. So go ahead. Next, please. Who is there? Okay. 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 Very good. ठीक है, fine, 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 fine. I got your point. You have a good knowledge about, understanding the basically the share market and a little bit about, the IPO which you have shared. So it's a good presentation from your side. So next guy, please. So who is going to be there? Anybody left who's going to present? Other? No, no need. Who's there? Acha. Okay, Arun, fine. It's okay. So your presentation is well taken, and so your marks are as a group you're getting 8.5, okay, out of 10. And Aryan, you were doing very well. You have actually lifted the score of the group, okay. So otherwise you would have somewhere around 8. So I think you have got more than 8.5 out of 10. Okay, fine. So okay. So presentation is over. So I have allotted marks to you. Okay, fine. Okay, thank you so much. So you can just log out if you want. Attendance will be given to everyone. So who is going to be the next team who is going to present? Huh? Who is going to be the next? Uh, so it was 12:30 time, isn't? I mean, Abir Khan and you people, Shruti and Tejal. Okay, so ठीक है. So अभी screen share कर दो आप. So we'll have just 5 minutes of break and then we can start. Okay. So 12:40 we'll meet again. Okay, fine. So you can start. Okay, 12:40. Okay. Abir? Okay, I'm just noting down the names, okay? Just be on this slide. Shrindi, Shruti, Tejal, and Vishaka. Hari Darshan, okay. Hari Darshani. Okay, start. Hari Darshani, can you just open your video and can I see you? No, no, no problems. Okay, carry on with it. Yeah, yeah, I can hear you. Okay. Who is the other guy? Hmm. Okay. Good. Not more than, not more, not more than how much percentage to the retail investors? ये 10% लिखा है ना? Okay. Okay. Just open my public issue slide. Just open that. Yeah. Open and just put it on this thing. Present that. Go to slide number 125 or thereabout in the public issue. Okay, just Abhi, just go to whatever other device you're having, just go to the slide around 125 or so on the public issue. No, no, just no. After that, underwriting के बाद जो है, what should be the QIB portion under regulation 6, sub regulation 2, if you see that. So, what is the rule of the SEBI? What is the rule of ICDR rules? It says 10% to the retail investors, not more than 10%, and 75% to the QIBs, and 15, not more than 15% to non-institutional investors. If you just check, it is written there. Okay, just you can check. Fine, you can make your presentation. I'll just tell you. I'll correct you. I mean, fine. So retail investors, don't worry, don't worry. Just show you your presentation. It is doing very fine. I mean, what you are doing is great. Yeah, isn't it? Abid, have you checked? Okay, so it's what is it written? How much they can offer to the retail institutional, individual investors? How much maximum? It is 10. And how much to the non-institutional investors? QIVs. So that is what you are showing up in your slide also, isn't it? Dekho, just show your slide. Oh, yeah. Okay, then it would have been actually a combined number. Just we can see that later. Actually, this is the rule, and they should have done like this. So percentage allotted. Okay, you are saying percentage allotted was 18%, isn't it? The next slide. This is this is basically 54%. Okay, just check this slide. I think there would be some this thing. I'll also check. Fine. The retail investors should not be more than 10%. हाँ तो ठीक है चलो कोई बात नहीं इसको आप करेक्ट कर देना इसको करेक्ट कर देख लेना. Okay, I'll also check. Fine. So I just hold on. Okay, just I'll see if I can check. Okay, just we'll check it later. Don't worry. Okay. Yeah, yeah. Have you gone to the slide? That slide, because that slide has not come. You're just speaking. Yeah. Okay. Ah. Okay. 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 Fine. Fine. Okay. Just hold on. Just hold on. Hold on. ठीक है. ठीक है. Okay. Go ahead. Yeah. ठीक है. Go ahead. Go ahead. अभी. Vishaka, just hold on. They were not able to meet one criteria, that was the operating profit of 15 crores. So that's why they had to go for a book building process. That's why they are supposed to offer more than 75% to the QIBs. Okay, so they have not met all the criterias. So all the criteria should be met, fully. It's not that they are meeting all the criteria except one, and they can go with an IPO with some under regulation number 6.1. So they have gone under regulation number 6.2. Okay, where they had to give which is called the alternate eligibility route rather than the main route. So they had to offer 75%, and they have to necessarily go for a book building process. Okay, ठीक है आगे. Okay, it is saying 5 minutes left for the meeting, isn't it? कुछ ऐसा क्यों बता रहा है ये? हाँ, तो I think we'll try to again re-log into the new this thing, maybe in a Google Meet or something like that. Okay. तो आप Google Meet setup कर दो. I mean, Tejal, can you set up a Google this thing link? Can you send? I mean, okay, so that we can continue there. Okay. 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 We can carry on till it allows. Yeah. 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 Okay. So what is the growth? What is the growth rate you have taken for the long-term growth rate of the company for valuing the stock? What is the percentage of growth you have taken when the company for calculating the terminal value? What is the growth rate have you assumed? हाँ ठीक है, that's fine. Okay. But tell me one thing, Tejal. Tell me, what is the logic behind taking just 3% growth? Why not 5%? Why not 10%? What's the logic of taking a growth rate of just 3% for valuing a company, for valuing the terminal growth of the company? Global growth rate is okay, 3%. But as far as India is concerned, it is should be the India's GDP growth. Okay, of course, 3% seems to be quite reasonable. But at what rate India will continue to grow over a long-term future? So that means the company cannot grow beyond that. Okay. Fine. So maybe around 4% would have been also justified. But anyway, it should be around the GDP growth of the country. Okay. For example, would be growing at around 4%. So that means now GDP consists of industrial as well as agriculture. And agriculture is always lower. Okay, isn't it? And the service industries grow much faster than the typically old economy companies. Okay. Fine. So if for example, India is going to go at say at least 5% or 4% over the next say a decade or more than that, then in the service growth will be a little higher than the normal average GDP of the country, isn't it? So that means that is the rate at which all the companies in India will grow. So even a 5% growth would have been justified. You need to justify that if you're taking 5%, which seems to be very high compared to the global standard of just 2 or 3%, which you might have studied and taken it. Okay, because like US is growing at around 3% or 2%, fine. So that's why we always try to just take the global growth rate, but India is bound to grow at a much faster rate compared to the global world. I mean, all the world across other countries. So we can take even around 4% or thereabout as a terminal growth rate. Okay, so that is just this thing. Okay, yeah, yeah. Okay, okay. Okay, so that's fine. That's fine. That's fine. So that's a good, I mean, thing which you have taken basically. So you're justifying that we were not knowing at the pandemic stage that whether the world will recover at a much higher growth rate and everything will become normal as it has become. So maybe at the valuation at the time when you're valuing a company is justified. Okay, fine. It's good. So what else? Acha, one more thing. You're taken a riskless rate at 4.19%. Okay, fine. So what is this riskless rate? How we have arrived at 4.19%? The riskless rate 4.19% is perfectly right. Okay, it's absolutely right. But what is how we have worked out? Which bond rate? 10-year, 20-year, 30-year, 5-year, 3-year? It is a normally 10-year bond rate. Yeah, absolute 10-year bond rate is always chosen basically. There are reasons for it. Okay. So 10-year bond rate India is trading close to about 7%. It's close to about 7%. Why are you taking 4.19%? Your taken is right. It is 4.9. One point is okay. But actually, India's, GSEC 10-year bond paper trades close to about 7.26% right now. And maybe it was trading around close to about, 6.5% at the time of the public issue of this company, ATM. So it's gone up a little bit, but it was still should be around 6%, close to about that in the time when you valued this company. Okay, so bond rates were quite lower. It has gone up, after the Ukraine war. So it should have been 6%. So why there's a gap of about close to about 2% compared to the riskless rate? Do you have any idea about that? Okay, the idea is basically, and you can always research that because India is a triple B rated country. Okay, fine. So you have to take the risk premium. Yeah, the risk, this thing, the credit default risk has to be, inbuilt. So, you shave off around close to about 2% from the riskless rate, which is, which the GSEC gives. Fine. So India is a triple B rated country. Okay, fine. So there is a risk involved, in putting money into India. So a real risk rate will be close to 4% and not 6%. Fine. So you have made a risk adjustment, percentage to that. Okay, so just check. Fine. Okay. So ठीक है चलो. Okay, fine. You got an overvaluation definitely because the issue price was 2150. Okay, fine. Oh, company's losses. Yeah. Okay. Oh, that's very very high. Okay, but then you could have checked, you're gone to the Damodaran site. Damodaran, there's a, Ashwath Damodaran. So he publishes, the all these ratios for all the global countries in the world, particularly US. Okay, if there is any parallel of this company which is existing in US, so you would have seen, what is the EV to sales or price to sales ratio of that, I mean that company, and then you could have compared, whether it was overvalued or undervalued. So that would have been another kind of exercise. But anyway. It's okay. It's what you people have done a very good job. Fine. At the level what you are, people have done really good job. Okay. Anything further? Is there Shruti there? Shruti, you are presenting? Okay. 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 Fine. Okay. Okay. Fine. ठीक है. Yeah. Your presentation is absolutely okay. Wonderful presentation. Okay, Shruti. If you want to say something, some concluding remarks, you can just carry on. Two more minutes. Wonderful. Okay, great. Okay, so wonderful. This was a great presentation, but you should now skip it. I mean, come to the Google Meet. Okay, but I can just announce your marks. I found it was a top class presentation, contains all the details, and everyone has done a good job. So your range is between 9.5 to 10, your score. So I have to just decide, where to put that number. So it's a very good, presentation. So your score would be somewhere between 9.5 to 10. I'd like to conclude that later. So it was a good presentation. Okay, all of you have done a great job. Abhi, Vishaka, Shruti. Yeah, Hari, everybody. Yeah, Tejal, wonderful job. Okay, fine. Okay, अभी आप उसको जरा गूगल का लिंक भेज दो वहां पर. Okay, so that we can continue on the Google. अच्छा. Okay, okay. नहीं नहीं नहीं. I'll just open up. I'll just hold on. I'll just see. So we have to all shift to the Google Meet. So tell everyone to, who have not given the presentation, they should be on the Google Meet now. Okay. Acha. Okay, because it is still allowing. Yeah, yeah. Sure, sure, sure. ठीक है, fine. So who are the other guys who are going to present? So there's another 10 minutes break. So we start at 1:20. Okay, fine. 1:30 we'll start. It's the lunch break. Okay, fine. So tell everyone, put a message that we are going to start at 1:30 again. Okay.